Mexican Association of Insurance Institutions. And I'd like to make a proposition to the conference. The Honorable Minister of Finance of Luxembourg this afternoon referred to macroprudential supervision as a pendulum that has moved too far in one direction. I think that this makes it clear that the vision underlying this situation is really a little bit like classical philosophy and physics, because a pendulum moving needs to find the fair just, and that is Aristotle and Euclidean physics and the rest of that. Now, I believe that if we want to reimagine insurance, we need to do more reframing than ComFraming of the role of the state and of the regulators. All the discussion so far around policy making in insurance centers on prudential policy. And we, in my opinion, we're a little bit stuck in an image of this pendulum. And it is because we have not evolved beyond classic Euclidean physics in our vision of the world. And the world is now ruled by the theory of relativity and quantum physics. I don't think the pendulum can be our image of reference, and I suggest a much older explanation. I think we should look at yin and yang. The fundamental purpose of the nervous system is life, and in order to achieve this purpose, there is a sympathetic and a parasympathetic nervous system. The purpose of enterprise is value creation, and for it we use corporate governance and business development, which are two faces of the same coin. The purpose of macroprudential policy is financial stability. The problem is not that the pendulum has gone too far to the right. The problem is, in my opinion, there is too much yin in prudential policy and no yang. The IMF recognizes the need for yang in prudential policy. Article 4 of the IMF Convention clearly establishes that beyond financial systemic risks, there are other potential risks that can derail financial stability. These risks are today very loosely dealt with without a systemic approach, and are referred to as natural perils, terrorism, gap insurance, financial inclusion, etc. However, they need also consider risk management of state-owned assets and public goods in general. The state must acknowledge it is a fundamental stakeholder in risk management at a national level and needs to develop risk management public policy as part of macroprudential policy if it's going to meet its obligation to promote financial stability. So I would like to propose that the role of the state as regards the insurance industry needs to be reimagined and reframed by giving consideration to the importance of public risk management in the context of financial stability and economic development. And I'm not thinking of the role of the regulator in terms of what insurance companies need to do when dealing with cyber risk. I'm thinking of the role of the regulator and the state in ensuring its own assets, in making sure that the population that is not covered today has some sort of coverage, in a strategy that needs to go from risk assessment to mitigation and prevention, something that is dealt with across the board and not in silos. And from there on to what the state wants to retain and insure, and finally, contingency plan and disaster recovery plans. Thank you. Thank you.
So I'm going to take a group of 3 questions at a time and then hand over to our panelists. If I can ask other participants, I think we have probably 20, 30 minutes for questions. So if we can keep the questions quite short, to the point, and make sure we have time for as many questions as possible.
Thank you very much. I'm Steve Simchek with the American Insurance Association, and also pleased to chair the Global Federation of Insurance Associations Cyber Risks Working Group. So Pepe, thank you for your presentation. I'm just wondering if there's any more information you can give us about the small group that will be working on cyber underwriting and what its activities and charge might be, and hope that you will feel free to call on JIFIA to help in any way we can. Thank you.
And we have a third question up here.
Hello, Dave Snyder. Hello, how
Hi,
are
Dave.
you? Thank you very much for the opportunity to participate in this annual meeting. Just a couple quick questions. The Property Casualty Insurers Associations of the U.S. provided a letter to the Secretariat regarding the ICS, and I wondered how IAIS is planning to deal with the issue of jurisdictional flexibility. I think one of the lessons from the financial crisis was that our regulators all were effective, but they did things a bit differently. And the second question I have really relates to whether IAIS is looking at consumer protection in terms of encouraging competition, and what the IAIS is planning to do to assist in the development of insurance markets in the less developed countries, and how it can work with the industry and engaged in really addressing the bridging the gap type issues. Thank you very much again for the opportunity, and thank you for your leadership.
Thank you very much, Dave. If the panelists may, I'm happy to kick off and then hand over. I think, thank you for the first statement from the floor. And this is a very long conversation, of course, but what I hope is evident from the remarks earlier today, and it's certainly been the subject of our discussion in our annual general meeting and during the earlier course of the week, is that absolutely this sense of the balance in our focus as an association going forward is very much there. Absolutely, I think it's recognized that over the last 5, 6, 7 years or so, we have, by necessity, had a very strong financial stability focus in the wake of the global financial crisis. Absolutely, as we move to complete and finalize our current commitments, this has a great benefit, and it opens up space for us to turn our attention increasingly, because this is not new, but I would certainly say it enables us to accelerate the focus on these issues that you touched on: sustainable economic development, the role of insurance and what it can contribute, and the role of insurance supervision in that space. And that includes important topics like resilience, the protection gap, financial inclusion. These have been topics that have been close to the heart of the IAIS for some time. As you know, we set up the Access to Insurance Initiative in 2009, so we have been busy with those topics for some time, but they will be, and this is a clear message from our strategic plan, an increased focus. And we know there are also industry conversations going on, in particular in the Insurance Development Fund, the IDF, around some of these important topics. And I think we look forward to having that engagement, because these are issues that are close to us, and we will have those. Look forward to having those conversations with the IDF and others as well. I will maybe kick off very quickly on the small group on sustainable cyber insurance underwriting, because this is a very fresh topic. And to say we got the official approval this week for the mandate of the group. It is a somewhat exploratory project, in the sense that the outcome, the objective of this project is not setting out to develop new standards. It is to say we know that cyber underwriting is an increasingly important area of the insurance sector. There are general, this falls within the general space of sound management of underwriting risk, but there are peculiarities to cyber underwriting. And as insurance supervisors, we have an interest in making sure that where cyber underwriting is taking place, it is taking place in a sound and sustainable way. And so we will be exploring what we view as potential role of insurance supervision in supporting sound cyber underwriting. It's, as I say, exploratory work. We hope to do it quite quickly by around the middle of next year. And absolutely, the idea is that we should be reaching out to our stakeholders who are tackling the very same issues around sustainable cyber underwriting, and bring our heads together and think what, if any, is the role of insurance supervision in this space, and have some further analysis for discussion by the middle of next year. I'm going to stop there, see if anyone wants to add to what I've said, but I'm also conscious there were some specific questions with respect to the ICS and jurisdictional flexibility and issues around consumer protection, the role of competition, and the IAIS's focus on development of insurance markets.
If I could figure out how to turn this on,
Yeah, it's good. It's working.
Oh, it's on. Okay, thank you. So thank you for that question. I mean, let me just start by saying, ultimately it's up to the jurisdiction to implement the standards of the IAIS, so that's very important. The goal of the ICS, as you well know, is to develop a common language for the assessment of group capital. And in doing so, the IAIS has developed a reference method, and that reference method is a mechanism to create that common language. And obviously the ultimate goal is over time there should be increased convergence towards the ultimate goal of that single ICS calculation. Now, having said that, the ultimate goal is not today or tomorrow, it's the ultimate goal. And it's recognized that various jurisdictions have different approaches currently to the assessment, group capital assessment. And the ICS and the IAIS has recognized that that it needs to accommodate these different approaches. So, for example, the gap plus and the internal models are both considered viable options for the group capital calculation. And as I mentioned in my presentation, there is also recognition that the US is doing the aggregation method, and the IAIS will be working towards developing criteria to assess whether that produces comparable outcome to the reference ICS. So I hope that answers your question, Dave.
Thanks, Jonathan. Well, first, Manuel, I mean, you're right. I mean, probably one of the examples of this kind of risk that you were talking about is the Haiti earthquake of 2011. I mean, after that earthquake, Haiti hasn't recovered. And that's because there are no recovery plans, no risk, there was no risk assessment, it was not insured. So we have an example of a country that because of a natural catastrophe, it really hit it. And normally when we have like natural catastrophes, we have some recoveries, I mean in Mexico or in Japan or New Zealand, because we have insurance in Mexico, or other schemes of protection schemes of governmental protections. So yes, we have there an example, and more, as I understand, more your proposal is to have like a risk management program. It's something that yes, I mean governments should have, and as well as enterprises should have. I mean, when we talk about cyber, and here I turn with Steve. I mean, when you have a cyber in enterprises, also one of the ideas is not that insurers do not take all the risk without knowing it on cyber. And probably we were, Steve, about 3 weeks ago in Santa Clara, and I was there with my boss, with Norman, and we were commenting that the thing that really preoccupied us was that hearing all these experts on cyber, that they were also preoccupied about cyber. So that really preoccupied us. And of course, as Jonathan said, we will keep in touch with you. Just, I mean, your feedback will be great, and it will be deeply appreciated, and it will help us a lot. And then Dave, about this implementation part, in my presentation, I talk about the implementation part of probably going in the future, I still don't know when, going in something similar to the regulatory consistency assessment program of the Basel Committee on Banking Supervision. And that program, what it aims at is that when we have a problem like the financial crisis, jurisdictions do not go in different ways, same as what you were saying. So that is part of the implementation that we're also looking at.
Thank you. I think we have time for another round of questions. Peter?
Thank you. This is Peter Duran from AIA Group Limited in Hong Kong. I have a question for Elise. You mentioned all the things that the IAIS will be doing over the next few years, and you know, we've had 2 consultations on the ICS. We certainly appreciated the opportunity to give our input, and I hope you found the industry input valuable. So I'm wondering why your list of things that will be coming in the future doesn't include a consultation on the aggregation method. It seems to me that everything else the IAIS is doing gets consulted on, except that.
Okay, next question.
Morik Phililov with the Phililov Consulting Group. The minister this morning spoke strongly and eloquently about the need for investment in particularly new technologies, energy technologies, but the issue of infrastructure investment is a major one around the globe. And I'm wondering if the IAIS has this on the radar, both in terms of its guidance and practices to relate to the ICPs, but also the supervisory practices. Is there a work stream to look at how we can really evaluate and structure these infrastructure investments that still protect the policyholders as you wish to?
Okay, thank you.
Good afternoon, Nicolas Jean-Marc from Insurance Europe, and also chair of the Systemic Risk Working Group of GIFIA. I wanted to thank Alberto for the appetizer. We will certainly read the consultation document with a lot of interest. I just would have one question for the time being. It's about the second pillar that you referred to, the cross-sectoral aspects, and I wanted to know if you could expand briefly on in particular, the consequences of this comparison with banks, as I understand it. Thank you.
Thank you very much. I was starting to worry that Alberto wouldn't get a question on systemic risk, but thank you. One more.
So, Xavier Cogna, I'm working for the insurance company BNP Paribas Cardiff. So my question relates to ICS. We took part to the previous field testing, and I understand that for the 5 years after 2019, there will be mandatory confidential reporting. So my feeling is that the word mandatory is not the appropriate one, because at least at the end you will have in each jurisdiction who will implement, and at least for the 5 monitoring years, it should also be something voluntary, as we have done until now. So my question is, could you elaborate on this mandatory word, please?
Okay, well, I think we can hand over to the panelists, and maybe Alberto, would you like to go first? You haven't had a chance yet.
Yeah, thank you for the question. Actually, this has been one of the major tasks of the group, because first of all, it's not easy to measure and assess, systemic footprints in different sectors, because as you know, there are specificities. But we have worked quite hard in order to define indicators that in the methodologies that are applied to banking and insurance could be as consistent as possible. Through the adjustment of the indicator and to the definition of the indicator in a way that increase the consistency whenever possible is increased, we could compare what is the weight of insurance company compared to other the systemic footprints of other sectors, of companies from other sectors. This is not easy to do, but can give you the idea of which are the aspects that should be taken into account when designing the policy measure. And also we take into account the cross-sectoral aspects also for defining to what extent certain activities could be systemic or could produce a systemic impact. So in the consultation paper, you will not see specific conclusion about that, but all other aspects we are describing in the consultation paper are based on certain consideration about what is the relative importance of insurance compared to banks.
Okay, well, I'll try to field the ICS questions. In terms of the aggregation method being consulted on, actually the aggregation method is still in fairly early stages of its development, the IAIS is giving consideration to what sorts of principles or criteria might be used to assess its comparability to the ICS. So this will initially be a discussion among IAIS members, and I expect that sometime in the future it will be a consultation on that comparability criteria. In terms of the reference to the word mandatory, I think we need to understand what that word means in the context of the IAIS, because the IAIS is a standard-setting organization and can't require anything of the insurers. It's up to the supervisors to do that. Now, having said that, as members of the IAIS, its members commit to implementing IAIS standards, and the IAIS has come up with the reference method for which creates a common measure or yardstick, and they have asked its members to ask all their IAIGs to begin reporting that reference method to the supervisory college, starting with the monitoring period. So just to make that very clear, it's mandatory in that context is an expression that its members should require this common measure. So I'll stop there.
Well, Morna, you asked about investing in infrastructure projects. That's a quite difficult one. I really don't know that each regulatory system around the world, but normally, I mean, you have to assess the risk on any investment. And by assessing that risk, you know if you should invest in that or not. I mean, we have the case of Mexico that recently just stopped a major infrastructure program that was like a no-brainer, and suddenly it just stopped. So yes, you have to assess the risk and then decide if it's a convenient investment for you or not. And well, there's going to be a panel on that tomorrow, but let's see what happens. And Dave, there was on the previous round, there was another question about the insurance gap. And in that sense, probably there's also a part on the insurers that you have to look at, and that's really knowing the people that are going to buy insurance. I mean, in Mexico, that has earthquakes and everything, only 8% of Mexico City population has home insurance. And home insurance is less than buying a Coke if you divide the premium for each day. People buy Cokes and they don't buy insurance. So you have now, and with fintechs, you have now all the tools and all the opportunities. You just need how to address the needs and how to attend them. It's a two-way part.
Thank you, and I'll just perhaps add one thing on Morek's question, because I think there was an aspect to the question around what the IAIS is doing in this space, and to say it does form part of a work stream that the Capital and Solvency and Field Testing Working Group is looking at, because there is the question around the treatment of infrastructure investment, in particular infrastructure loans, in the reference ICS standard model that's being developed. You might know that the World Bank has done some work on this, looking at credit quality of those assets, and those that participate in field testing would know that we also collected some data through field testing on those aspects, and we'll be considering that as part of the finalization of ICS version 2.0 for the monitoring period next year. So I am informed, unfortunately, we are out of time for questions, so that leaves me to say thank you very much to all of you for your interest in our work here, and a very big thank you to our panelists, and over to you, Gabriel, for the next session. Thank you.
Thank you very much. Muchas gracias. Grazie mille. One of the advantages to live in Luxembourg is to speak different language, or at least to be capable to say thank you in 15 different. Now, the last moment of this first afternoon, some call it award, reward, récompense. Here we call it recognition of distinguished fellows. And to reward them or nominate them, please welcome on stage Vicky Saporta, that is back after a brilliant introduction.